Thank you. Thank you, Andrea. Welcome back, everybody. If you were here last session, I was feeling a little under the weather, but I'm feeling much better now. I'm really excited to be here. This is definitely an exciting but kind of sad tribute to the wrap up our session, but I'm really glad that we have all stuck in this far and we're here to continue just to put in all of the parts and components that are required for the plan. So a business plan is not complete without the financials. It is probably one of the most important reasons for a plan. You must know what is required, what it's going to cost, and what exactly are you pursuing. So we're going to answer all of your questions that you have. If anything come up, please save your questions for the end. If you have looked at the workshop section, you'll see within our workshop presentation here, we have the introduction to what financials are. I will just read this briefly just to, get the ball rolling here. But it's just financials are one of the most important aspects of a business because it allows the business to sustain its operations, manage risks appropriately, and to grow over time. So that essentially is the reason why financials are a big part, because it's it allows you to have a financial image and positioning, but not only just for the internal parts of the organization, but also for the external as well. If you're working with suppliers, if you're working with artists, if you're working with other organizations, you're going to need to know what it's going to cost, what you're going to make, and how that money is going to be spent, because there is always a cost to running a business, and you need to make sure that you always have adequate flow of cash so that you can cover all of your expenses, pay the appropriate people, and just to deliver the service to your internal and your external customers. So when we first talk about what financials are, we know within this group, we have some businesses that are starting up for the very first time, and we also have businesses that have already been in operation. So what we've done here is within these slides, which were originally included in the workshop template, I've expanded on this and I've taken this information here and I've put it into the Futurepreneur cash flow document. You will be receiving a blank copy as well as the completed one for North Sun organization. We're sticking with the same example that we've used throughout this session, which is the North Sun Artist Management Company. So if you're looking at these slides are accurate up until we get to month 9, because in the original, when I've done this, I didn't have much area of space to work with. So I only did the cash flow and business expenses and the inventory costs up until month 9. So now all this information has been transferred into the Futurepreneur cash flow, which also is a pre-generated software. So what works great about this is when you input the numbers, it actually produces the results that will go into your cash flow year 1 and your year 2, and that will be then translated into your income statement. So you will have both versions. This one here, these slides here, these next following slides are manually done by me without the formulas are hidden because it's just a regular PDF. So when I'm going to open up now, we're going to transfer over to our cash flow Futurepreneur. It's a 24-month planning tool. You have a blank version, which I have here. So we are on the North Sun Artist Management Company cash flow. I was looking at the blank one, but since we're here now, I'm just going to give you a quick run through. Again, on these tabs here, you can switch. So there are several different contents or little areas. So we have past purchases. We've got the startup columns. We've got the year 1 cash flow. We've got the year 2 cash flow. We've also got the income statement. And then we've got glossary, which just gives you an explanation of all of the terms used, as well as the financial guidelines. And then they have a feedback survey if you'd like to provide that. So just to go back up to the instructions, if you want to read these on your own time, I think that would be a better use of our time, because you are going to get a copy of this, so um, you can go through this and see where everything is and how to go. So at the bottom here, you can also, like I said, you can manually click the tabs to the left, or you can come down here to the bottom of the ribbon and you can select each section by just clicking on the various stages on the various tabs. So when you first open up this document, they give you a nice column that's called past purchases. And this is for money that has already been spent. And remember, when you're dealing with business, any money that you spend should be accounted for. Even if it doesn't make it into your final 2-year cash flow, you want to just get into a habit of tracking all of your expenses. Number one, for Revenue Canada purposes, and two, just so you know additional costs that are not maybe a regularly bought item or something that is going to make it into your monthly expense, right? So there are your regular expenses that you'll have on a monthly basis, and then there are some things that you'll have that's a one-time expense. And then the main aspect of income reporting for your business is keeping track of everything spent, because trust me, you don't want to at the end of the year have to do an audit or think that money is missing or think that money is unaccounted for, but merely it's just misplaced or you don't have a copy of that. So when you come to this tab, if you have spent any money, you can list the item and you would list the dollar amount, and then you're done with that section. It's very simple. It makes it into it. You'll see where it comes up, but it's not a regular ongoing expense. So it's not calculated into the income statement for the year. But it is recorded within this template. So after that, you're going to come over here. You're going to click the Startup tab. I guess my computer is really slow, but here we are. So this is actually an old template from 2014, and you may have some challenges trying to get in there because it is a protected document, and that is strictly just so it helps keep the formulas in place. Because if you do mess up a cell and a formula, you're gonna have to go back and manually do it. So for this purpose, we're not gonna change the dates or anything here. I just left it. But as you see, when we first come to this page, you will automatically notice that we start off with the funding sources. As just like in the example within workshop PowerPoints, we stated that we are going to be bringing in a sum total of this here. And how we broke it down was the owner, you yourself, would be putting in $5,000. You're going to be loaning or borrowing $10,000 from Futurepreneur. You're also going to be borrowing $5,000 from BDC. And then, then there's other types of funding. There's granting. And then the most probably biggest investment you'll have is love money. And that's from families and friends that just want to support and see you grow. So I usually always add these two columns just because it's usually most likely that you're going to have some sort of investment from family and friends. So our total here is the 5,000 plus 10, which brings us to 15, adding another 5, which brings us to 20. And then we have the 1,000 and then the 500. So 2,000, 20,100, 21,500. Whew. Okay, so now that we have that out of the way, now we're going to look at what we do now. So we know that's what we're going to get. That's what's going into the business within your first month of starting your business. If you already have started your business, then your numbers would be different, because you would not only include what you are not only you would include what you're getting, you'll also include what you've already earned, and that can come into a second column. You can have it as under funding 1, and you can put in your previous sales or any income earned in a previous period, and you can then label it as, instead of it being other funding, you could then just label it as previous year's profits. or cash earned from previous profits, or from previous periods. Either way you say it, it's fine. You will be able to explain where the money came from and what it's going to be used for. So now when we get to this column here, under the startup column, we do have leasehold improvements. And that section is for anybody that actually has a physical brick and mortar or retail space, right? But for the purpose of here, we're not going to utilize that. So I just used it as the regular expenses that we would have as a startup. Again, if you do rent a shared space, or if you do have your own brick and mortar, even if it's just a storage room, it has an expense, that expense would go here. If you're leasing, if you're renting, those expenses would be listed here. So for our purpose, as you can see, we have business registration, we've got license and permits, we've got logo, and we've got the cost in this column column C, which is number 4. This is all of the costs associated with starting up for the year 1. It subtotals it for you automatically, and our total is $36,220. When you're done doing this here, I want to show you something here, because if I don't show you, it might not make any sense. But one of the things is because this is a list of the 36,200, you're not exactly explaining where the money is coming from. Now, remember up here, we've got sources, 1, 2, 3, 4, and 5 different sources of money. So although we listed the costs, we need to explain where that money is coming for which item. So when we delegated this $85, we have 5 choices. So I just put it here. It doesn't matter where you put it, but do you see how if I don't assign it to a source, how it goes minus on the right hand side in the balance check? You'll see it appear in red, and you'll see it appear with a negative number. That just means you have to assign your costs to a certain source of funding, and it would be any one of these ones listed here, regardless of how you list them. Okay, so as long as you take all of these numbers here and you add it anywhere along these 5 boxes, you're fine. So remember, I erased 100, so we're just going to add that back here, and boom, we are back to 0. It should be black, and it should be at 0. So if you look along the bottom here, we have the startup subtotals, and it just explains where the money, which money you've used those costs for, and how it reflects later on, where it reflects your startup inventory totals. So remember, these are the costs for us starting, and these were the various expenses that we recorded, and they are being taken out from these 5 sources of money. But because it is the 36,220, it is more than the 21,500 that we are originally investing. And is that okay? Of course it's okay. Sometimes we spend more than we have to invest, or sometimes we invest more than we have to spend. Now, all that means is, for the purpose of this area here, the working capital section, we're in the minus, right? But as you move forward throughout the sections, you'll see how this number is going to be reflected at 0 and then go up to positive. And the reason that is because we're going to be making sales, right? And when we make sales, we make more money. And that money will then be reflected into the cash flow. So looking here, you'll see these 3 negative amounts, and that's just because the 36,200 is more than the 21,500, but that's okay. So we're done with this startup page, and now we're going to move over to the cash flow. Okay.
Quick question.
Yep.
Quick question.
Yes.
Good question from Jess, is wondering, yes, where would you list in-kind options or in-kind services?
Yep, in kind. So, oops, sorry, let me get back to here. So do you see how here we have an additional spaces here? You could list it in 2 ways. So if you wanted to, let's say you didn't require any of these, all 5 of these columns, right? You wanted to add an additional column, you can do that. However, you would have to format those formulas on your own because it's not included here. But if you're doing it by hand, it won't be an issue. But if you're using this, I would suggest that you change one of the other fundings and you would include that as your in-kind. That way, your formula is captured within the same setup for the rest of the plan. So you have a choice of listing it here as an in-kind and then suggesting that amount. So you would start off with here, you would change this amount to in-kind, and then whatever that accumulation of your in-kind is would be represented here. Or you can come over here to the startup cost and you could add it here, right? Now, the only tricky part with that is you're going to have to formulate that to show that it's you're changing it from a cost to into something that's coming in. So the easiest way to do it, if you're familiar with Excel, you won't have any problems doing that. It's just a simple formula, and then the system would know that that is an in-kind, so it's not an expense. It's more as kind of like anything incoming. So that's how you would look at that. It would be an asset. But to keep this friendly for us, we'll just keep it as I would suggest you would find it. It would be easier if you just put it under other underfunding. It's a lot easier that way. So are we all back at the cash flow? Year one? Perfect. Okay. So just like in our slides for the business plan workshop, in our PowerPoints, we had from month one, and our month one is January. So we had from month one all the way over to, I believe it was here, which was month 9. So up from month one to month 9, for the whole purpose of this cash flow year one only, we will have all those numbers will match the original slides. But because now we have more space to work with, we have month 10, month 11, and month 12. So our numbers will change from that point on, but you can see how we are going to come up with these numbers. So we have assigned a cost. We have assigned a sale cost for product A, product B, service A, and service B. So there are 4 sale assumptions, and this is also called a sales forecast. And they're the same thing. You can use the terms interchangeably because they mean the exact same thing. So when you're first starting a business, everything you think of is in future, right? And it's how many sales do you think you can bring in? Now I remember when we talked about one of the hardest things with doing a business plan is the unrealistic numbers. And this is where I ask you to be modest, but also give some room for growth and give some, because you do grow. And your month 1 sales may be closely to your month 2, but your month 11 and your month 12 will be different than your month 12. They usually start to trend upwards and not downwards, right? But again, we were very modest with these numbers. So if we're looking at these columns from the left down, we've got our sales assumptions, we've got cash from sales, which are all related to product A, product B, service A, and service B. So here, this column here represents what you are selling. Your product A is $75, product B is $45, service A is $90, and service B is $69. So these are the costs. That is the sales. That is what people are paying each time they use one of your services. So I'm going to jump back up to the sale assumptions. So remember, we have month 1, we've got month 2, we've got month 3, all the way to month 12. So it's 12 months of the year. Our first year is January. What I am essentially saying by looking at this document, you should be able to pick up. And you can, if you do have a calculator, if you want to go and use that and to verify, just to, sometimes it helps to do the actual math yourself. But so what we're saying is in the month of January, product A, we are going to sell 14 pieces or 14 products or 14 copies of product A. Now, we are selling product A for $75. So if you multiply 75 times 14, you get a total of $1,050. So that's where you make that money. And you would do the same for each month, right? But once you put in the cost here, it will automatically generate it based on the assumptions that you make month by month. So moving forward, we now are looking at product B. Product B in the same month of January, which retails for $45, we sold 10 of them. That brings us to $450. And we would do the same for service A, which is $90. We provided 15 services for service A, which gave us a total of $1,350. And then for service B in the same month of January, we sold 11 services, which gave us the total of $759. Once you enter these four numbers and it generates these four numbers, the total cash sales right here, this box is automatically generated for you. And that's why I like this template. And I felt it would be a lot easier for anybody that's working with the cash flow statement for the very first time, because you want your numbers to line up, you want them to be accurate, and you don't want to spend too much time doing it either, because then you start to confuse yourself or you make mistakes, and then it can, it can be a little bit disheartening, and then you get frustrated. So this is probably the most easiest essential way to do it. You would just do the exact same thing for every month. So, yep. Does anybody have any questions so far?
Yes.
Yes. Okay.
Tyra's wondering, are we able, just with regards to this whole template or thing, are we able to add
Yes.
more products?
Yes.
And we can like edit, so we could rename product A, like
Oh, for sure.
customized birthday songs or whatever
Yes,
our product
yes,
is.
yes.
Okay.
It could be any type of merchandise, any product, any type of service. You would just use a description, just so that you can differentiate one from the other. So let's say you have two similar services. I wanted to keep it simple and just do product A, product B. But if you have multiple products or multiple services, just make sure you can differentiate between one from the other. And as long as you can, then that's fine, because then you'll be able to assign them. But yes, this template works perfect to add more columns. And the formula will be the same if you add columns on the cash flow. That's fine. It's not an issue, and it'll pre-generate it for you. So I want to give you an opportunity to like scroll over here. Because the other great thing about it is it also gives you a percentage of your sales. And that's a huge thing, because a lot of us, we want to know what is our top seller, what makes us the most money, what should we do more of, and what should we do less of. So it gives you your totals to the right of the column. So if you're looking here, you can see that you have 28% of services, you've got 14%, 35, and 24. So 35 being the biggest number, that would be, I believe that would be service A. So service A brings you or generates your business the most money. And that's always good to just have for your own knowledge. Because it helps to explain, and also as well as if you have to explain to investors, or if you wanted to add on to a service, what service should you be adding on to? And it would probably be your bestseller, right? The more value that you can generate for your consumers, the more they're going to return, and the more higher price point you can make per item. So to move down a little bit more, remember when we were on our first page, we had our startup costs. So that's just reflected here, and it automatically is pre-generated for you. It is transferred over automatically. And this is helpful because it helps you track your money. As you started off with your $36,220 investment or money that was spent, it helps you track the inflow month by month. And this number is changed with the amount of sales from each month. Does that make sense to everybody? Okay, yeah. If you have any questions, let me know. Andrea, don't hesitate to jump in if any questions pop up. This is, yep, go ahead.
I am jumping in. I
Yep.
think I know maybe, but someone's just wondering, where would they put royalties? But I think that would come as part of income or cash flow, right? Versus,
Well, if it's something that
or
comes in monthly, then
yeah.
definitely add it. Add it. I would add it. All
Okay.
I would do is, Yep, sorry, go ahead.
Okay, no, yeah, okay, they usually, yeah, every 6 months or something, or quarterly
Okay.
maybe.
Well, that's the thing too, right? This is your cash flow. So if
Mhm,
you know you're going to have something even twice a year, but it's going to dramatically affect the numbers for your business, the revenues,
mhm.
then just add it in. All you have to do is make sure when you set up the formula, it's not on a monthly basis. And that's easy. If you just watch a quick video into Excel, adding a formula, it'll show you all of the various ways to add and to make your own columns and to keep that formula. It's as simple as, an equal sign plus the cell times something else or minus. It's not as complicated as we can imagine. So please, if you have royalties, whether they come in monthly, semi-monthly, or annually, add it because you want to keep track of everything that's coming in. One of the biggest mistakes is not including everything and either having a surplus or overspending where you don't have to because you think you have this regular surplus of income, but maybe that was just for that month. And you need to make sure that you hold that for future times, right? So in saying that, yes, royalties, please add it as an additional column. And then just keep in mind, if it is something that's monthly, you record it as monthly. If it's semi-annual, then you would record it as semi-annual. So moving on. Now we have from there, we are now at cash flows. Now, when you first open up this template, it has a percentage of sales because and I didn't want to do a percentage because I know a lot of us may not have it may not be an actual percentage, or it might vary because of the variable cost based on how much or how little that you sell. So I figured just to keep it plain and simple, we would just use numbers. And how I did that was I came up here and I clicked here. So this here, when you open it up on your screen, and I'll show you this document blank again, just so you can see. But when you come here, it comes up as a percentage and it's 20%. So I just highlighted the cell. I came up to general here and I clicked general, no specific information. And I changed it from a percentage to general. And now I have my number. And then I did the exact same thing. So remember, everything has a cost. So because we sold this item, product A, for $75, that's what we sold it for. That's what it was worth. That's what it retailed for the consumer or the customer. But that we originally had to buy that, or we had to make it, right? So there's an expense that comes with making it. So for the purpose of this template, we said our product A, which we retail at 75, it costs us $25 to make it. So the markup is $50, right? For product B, it retails at $45, but it costs us $20 to make it. And we did the same for service A and for service B. So that's where these numbers come from. Again, your products, your services will be different. So you would put here any number that what it actually costs for you. And if you're unsure, the rule of thumb is to add 2% more if you're unsure. And the reason is you never want to estimate that it's going to cost you less. And in reality, it costs you more because then you're always going to be at a cash shortfall. And that's not at a good place to be. It's better to over assume and to over represent what your cost is, and then it'll fluctuate once you have a better idea or you actually know exactly what it will cost you, and then you can definitely go from there. So again, I just wanted to give you a quick explanation. So this $350 comes from the cost of month one. Remember, we're talking about month one here. And we're talking about product A, which retails at $75, but it costs us $25 each. So if you multiply 25 times, where are we at here? We have the $350 here. So this 350 is that was for product A, which was the 14. So 14 times 75, that's what we made. And now that costs us 25. Sorry, I think I've confused myself here. Yes, I did. Sorry. I'm going to, so it costs us the $25 to make the $75. And when we multiplied the 14 times the 25, it costs us $350. So that's where that comes from. And we did the same for each one. So our cost of $45, which was product A, that's what we made, but it cost us $20. $20 multiplied by 10 is 200. And that's where that number comes from. And you just do the same for every month and for every product and every service. So if you have 6 services, you're going to have 6 different costs or price points, which you're retailing at. And then you're going to have the variable cost, which is what it costs you to bring that product or service to market. And believe me, everything has a cost and a service. And again, if you're not sure about it, like again, you can overinflate it by 2%. And if you're not sure what that is, you would just multiply whatever the number is times 0.002 on your calculator, and it'll generate a number, and you would use that number. So here on a month-to-month basis, this is the total inventory cost. So every month, in order for us to make these sales, so I will just continue going across the boxes here. So every month to make these sales, we have to spend this much money. And that is an accumulation of all the costs of the individual services throughout the year. So when we come over here, we know that by the ending of the year, all for the first year, we have spent $19,480, but we made $55,560. So there is a profit. So you're doing well. And when we come down to the next tabs, now this is where things will start to get a little bit not confusing, I guess concerning. And the reason being is because all businesses have a general expense, and your general expenses are what you spend on a monthly basis. Now, for the most part, they are the same, but there are times where you're going to have higher expenses in one month and lower in another. It's just the way the cookie crumbles. Sometimes you're doing more, sometimes you're doing very well, so you're purchasing more so that you can sell more, and your expenses will increase or decrease. But the rule of thumb, if you had rent, if your cell phone, if you're paying for your internet, if you're paying for an employee, if you're paying for consultation fees, if you're paying for your Shopify services, they will pretty much have the same expense, right? For the most part. I did, however, if you look down, you're going to see that there is a column that says credit card transaction fee. Now, that's important because we are going to be accepting payment from multiple services, and you're not always going to receive cash, debit. You will receive credit at some point in time, and there is a cost to that. And it's always good to factor that in. But if you're not going to be doing it for the first, few months, you don't have to have that in. But somewhat before you hit to month 6, you might want to start including that cost in, so it's not a surprise later. So here, I just stated that there was one owner. Now, if there are 2 owners, and the reason why there is an owner's draw salary is because, let's face it, we're all in business to make money. We're not in it to be poor. We're not in it to do it for free. We want to earn a living doing it. So if you believe in your business, if you want other people to believe in your business, they've got to know that it can make enough money for you to support yourself, right? And starting off, you may not have thousands of dollars to pay yourself, but you should always be paying something. So if you go to BDC, if you go to Futurepreneur, any one of the Canadian granting organizations that work with entrepreneurs, they always say, if you don't know what to list, at least list 500, because that is something that they're expecting that you should be able to make on a or that you should be able to withdraw from your business on a regular basis. So if you look down, if you did have a second owner to the business. So if you're not in the business alone, it's not a sole proprietorship, you are a corporation, or you have you're paying someone else, that is also an owner to the business, you would just, I left this one blank. It's a funny little line because this template doesn't like zeros. So if you ever try to use zero in this template, it will just give you this little funny blank line. So again, whatever we put for month one, we're putting for month two. So these numbers are the same from September till January. Every month, you're going to be taking out $500 from the business. Our next fees listed here are $300 for consultation fees. And that can be for if you're speaking with anybody, if you're going to be putting on a little seminar, if you want to run information by somebody. I kept it generally low because there are other expenses to the business that are more important and that you should focus on. So I did want to have just a few different expenses, just so you had an idea of what types of expenses would be considered here, but these don't have to match yours. If you don't have any legal fees, that's fine. But again, if you are working in an industry where you have contracts, I'm not saying that you can't write your own contract. I have written a contract before. However, when I showed it to a lawyer a couple of months later, they laughed at me and said, you know, you tried hard, you did good, but I didn't include a closeout clause. So this contract ran on forever. We were never going to stop working with each other because I forgot to include an end date. So I would always say, you know, I know more now, but that's because I did consult with a lawyer, and it was I think I paid $285, and they looked at all of my different contracts, and they just kind of said, okay, you're missing this clause, you're missing that clause, include this clause, include that clause, and then I was on my merry way. They didn't actually do it for me because that would have been another expense. And again, I was new in business at that time, so you know I had to be really tight with the funding. So I wanted to just have the consultation, but do the work myself. And so since then, my contracts have improved. But at the same time, again, if it's your first time writing one, you want to make sure that you think of anything that can go wrong if things don't work out, if you're going to end the contract prematurely, what happens next. So if you're not familiar with it, I wouldn't play around with it, or I would do it and then get someone else who is an expert to just look over it. So that's why that fee is there. And then we have legal fees here, which is we have the employee and contractor fees. So I'm not sure if you're going to require an employee when you first start, or for any businesses here that are actively pursuing business. If you are considered your own employee, then you don't need this line because that would come out of the first line, which is the owner's draw and the salary. But if you are paying someone, whether it's a contractor, and it's maybe semi-monthly, maybe it's monthly, maybe it's only semi-annual, or maybe it's only once in a while, you still need to include this in your cash flow so that you can see how much you're paying for the year, as well as how much money you need to have so that you can ensure you can pay your employees. So we just said this is a new business. We're going to pay one person and they're going to be paid $1,500, or it could be two people part-time, $1,500 a month. Moving down, we have the accounting, we've got the advertising and promotions. We have all of these different expenses. You can play around with these numbers. You can add more, you can take them away. But I just, for the purpose of this, I've kept them all the same for all of the months, okay? Except the only thing that changes is the 2% for the credit card transaction fees. That is the only column on this section, so which is Section B, which is total inventory costs. The only thing that changes on here is the credit card transaction fees. So if we look over here to the side, you'll see exactly what it costs us every month for every different cost. So every expense at the ending of the year, this is what it costs. And it's good to know that because it's what we need to calculate our income statement, but it's also what's needed to know how much money do we need to make on a monthly and on a yearly basis to support the business. Remember, we have 2 points that we're going to pay attention to, and that is your break-even analysis. How much money do you need to make to break even? Again, the break-even point is where you're not losing any money and you're not making a profit. You are making just enough money to support what you spend. right? And what you've earned. So it balances out completely, not a dollar more and not a dollar less. So if we come down here, so the great thing again with this template is, remember, it takes a general ledger of everything on a month-to-month basis, and it compiles it for you. So so here, it does again keep carrying. You're going to keep seeing the 36,220, because that number is very important, because it's what was originally spent. But here in this section, other disbursement, now this is where you're going to have to inquire. Whatever money you're borrowing has a cost, right? And usually when you borrow money for the business, you have an interest, you have a payment that you're paying the principal, and then you're also paying the interest, just like with our credit card, right? We have what we borrowed, and then we've got what we spent, and then we've got the interest that we pay back. So we're paying back both. So if you enter, if you come here into section 6, which is under the total startup cost, remember where we said we got this money from? The 10,000, the 5,000, the 1,000, and then the 500. We took that money, and they were a part of those money, with the exception of the 1,000 and the 500. That was a gift from family. So everything else has a cost and an expense. And because this is Futurepreneur and BDC, because they work together. BDC being the bigger umbrella, they are the investment group for entrepreneurs across Canada in all businesses in all sectors. So you're going to want to go to them and Futurepreneur when you come for funding. Also, their payback periods are much better, lower interest rates than going to a bank, and they work with new businesses, so they're more lenient with their lending than if you went to a traditional bank. So it's really great that you're going to have a go ahead with their software prior to working with them, because you'll already know how to do it. So coming down here, again, these are the costs. So this is the payment of the money that we borrowed. Let me just scroll back up here, because I can't remember off the top of my head. I believe, did we say it was 10,000 or 5,000? I'm pretty sure it was 10,000. No, I'm sure it was 5,000 from Futurepreneur and 10,000 from BDC. So this would be the cost monthly. The $79 represents the cost for the principal and the cost for the interest. So that's where those numbers are come from. And then if you go all the way over here, it shows you out of that money you borrowed, you'll be paying $871 back a year. And then we have the second one, which would be $495. So that was the cost of you borrowing from those two sources. So when we come down here, we've got sections D and E, which is the total other disbursements. And then this is all of the money so the total outflow, the total cash outflow. So we're combining. So when you think of everything we spent and everything that that includes the insurance, that includes all of the expenses that are listed in section 5 here. So so the total cost of inventory, with the additional of the general expenses, and then the cost of borrowing the money. All of that comes out across these margins. So our net cash flow is A minus E. So if you were to come back up, where are we? To A here, which is this section here, A, all of these numbers for that 12 months on a month-to-month basis would minus E, which would be, where is my E? Here, which would be E, which would generate these numbers that go across the screen here. Where am I? Here. Okay, so this is, sorry, I messed up there. This is A minus E right here. These numbers in red. And don't let it scare you that it's minus. It's your first year of business. It's where you brought in the least amount of money, but you had the greatest amount of expenses. Now, if you are, would this have changed if I used larger numbers up here? Absolutely. If I went ahead and changed these numbers right now, and instead of it being 14 sales for product A, 10 sales for product B, 15 sales for product A, a service A, and then 11 for service B, yes, these numbers would all change. And so would these numbers. And so would these numbers down here. But the reason I did that is because I wanted to be modest with the numbers, because it's not impossible to make a profit in your first year. Do businesses make profits? Absolutely. But it's rare that they make enough profit that that they don't go into the red within their first few months. So I wanted to be open and honest with these numbers so that when you do your cash flow, if you see red, you're not going to be too concerned because of the fact that you have seen it already. So again, this is just the month to month variations when you add up all your expenses. So when we come down here, so this is the cumulative cash flow. So again, we're working from these numbers here. Every month they reduce, right? Based on our costs, based on our sales, based on our expenses, right? So down this last line here, which is all in the negative for the first year, which usually stays in the negative for the first year. So our negative cash flow is $45,017, okay? And it looks scary, but trust me, by the time we're done, we're making a profit. So I don't know, when you have a chance to look at it, you'll see as it goes. But I wanted to come now into cash flow year 2, because now look, we're in our year 2. We're doing fabulous. Business is booming. People know who we are. They love us. They're supporting us, and we're doing well. So do you see the changes? Month 13 would be January, which is our first month of our second year. And remember, in the first one, we only had 14 sales, but now we have 50 because we're out there. We're generating more money. We're good at what we do now. We feel more confident, so we're advertising. People are starting to share the information. We're having more of a presence online. So now we're making more money, right? So again, we did the same thing for product A, product B, service A, and service B. So I basically did the exact same thing. The costs are still the same, but the both the sale price is still the same. So $75, it's still retailing for $75, but we're selling 50 versus our original 14. And now look at the types of money we're bringing in from each product and each service. And now you see here, when you come down to our costs are greater in the second year than they were in the first year. In the first year, we were selling less, so we made less. So our costs were lower, but now we're making more, so our costs increase. So do you see how that flows? And is everybody following along okay? Do you see how the $75 times the 50 equals the 3,000, excuse me, the 3,750, and how this 1,250 is a reflection of us selling 55 items, which cost us $20 each to make it. Pretty simple, straightforward. Again, it's easier with this template. Again, we have the inventory costs from month to month. They have increased greatly because we are dealing with more products and more services. Again, if you come over to the right side, you see here, we've got our different our sale variations. So, in the first year, maybe we still, I believe, at 33%, service A is still our highest grossing service. So that is captured there. So that is okay. But what I wanted to do now is just come back over here and get down to this part, because you know that part already. So coming into the total inventory cost, remember, all I did was transfer the data from year 1, keeping it the same. The only thing that is different is the credit card transaction fees, and I didn't lock these cells. So if you ever see anything like this, it just means you didn't lock the cell. I transferred it over and I didn't tell them that I was keeping the same formula. So I'm going to go here and lock the cell, and there you go. That green button, the green arrows disappear, right? So coming over here, sorry, just coming down a little bit more. I'm looking at the time. So I do want to let you know a few things. Again, so remember, these expenses are all the same. The costs are all the same. The only thing, and what we've retailed it for is still the same. The only thing difference were the numbers and the amounts that we have sold, because they increase, the cost increase. Our general expenses, this area is the exact same. The cash flow from the previous period, this number should go down month by month because you're increasing your sales, right? So this number will be reduced over time. And that just means the debt that we originally started with, remember we were minus 45,017, that number is now getting smaller and smaller, right? And then when you get to here, so here we've got the cumulative cash flow as well that is reducing with each flow period of money coming into the business. These two lines, you're going to see something generate. So remember how I said it's okay that we're in the red, we're minus this, because look what happens over here. This generates our year one and our year two. So for year one, our product A, that's what we brought in. For product B, that's what we brought in. For service A, that's what we brought in. For service B, that's what we brought in. So it tells us exactly what money we've brought into the company for that year. And then it lets us know that we started with an opening stock of 0 because there was nothing from a previous month. Now, if you have been running your business, this number would be different, and you would include that in that column. With your startup inventory, you would just simply click into that cell, the amount that you're starting with, and it'll pre-generate and carry that amount to this area here. But because we were using this as a startup, there was no previous opening stock before the startup. So this again is the total gross margin, A minus B. So you see from what we've brought in to what we've paid out. And then it shows us all of our expenses for the year, including the transaction fees. And then it tells us what it adds now, an additional from our general expenses, because this is an additional, that was our monthly cost that we had on a monthly basis. And then it takes into consideration the other disbursements, which would include the loan fees, which would include the principal and the interest, right? So once we have all of that tabulated, it will add this all up. So all of these columns will generate the numbers that you need. They do match the slides up until month 9, and then they change because we've added month 10, 11, and 12. So our net profit for year one was 66,517, right? And that was at a loss because we were minus, right? We had all of these expenses, but we still paid tax because we've earned that money. So when we're done, at the end, after we do all of our taxes, we're minus $49,888. And that's what we start our year two with. So remember, when we go back to the cash flow, you've seen those red numbers there. That's what it's tracking, what we're minusing month to month. And that's okay, because now we come back to the cash flow statement, the projected income statement, and now we're in our year two. So sales have increased. So instead of making 15,675 just for product A, we brought in 44,475. And it calculates everything from service A, from product A to service B, and that's what we brought in. So business is doing much better in year two than it was doing in year one. We see a total take of $171,000, 228. And then we've got the costs. So now you see how the costs have increased as well. So we know that previously in year one, our inventory costs were only $19,480. Now they're $60,146. Our expenses here are still the same. These went up. Remember, the only reason why it's different is because of this line here, which is a credit card transaction fee, but they're pretty much closely related. If you're to take out that line, then they would match dollar per dollar. And then again, you're still paying your principal, you're still paying your interest. They don't change because they're pre-generated monthly costs that Futurepreneur and BDC calculate when you sign for your loan. So coming down, we have the other expenses, which include all of these disbursement costs. And then we have here total expenses, which is our D column, plus our E column, which brings us to 72,252. And after all of our money is paid out, after we've paid all our bills and all our expenses, we brought in 38,830. So out of that, that whole, what did we bring in? That 171,000. All of that went out in expenses. Unfortunately, the cost of business is a lot, but don't worry, because you know what? You're going to learn ways over time to increase your sales and maybe even lower your monthly expenses, because what works in the beginning, maybe you get so good you don't have to pay marketing, because now your marketing is reduced because you are picking up sales easier, or you're just growing and there's a buzz around you and you don't need to put in that much money, or maybe you just turn to social media and that is where you're getting majority of your sales, and so the costs are less. So now your income tax that you made on that money that you're spending is $11,261. I just want to check something. I'm going to send you an email, Andrea. I want to make sure that this is completely correct. I'm going to just, because it should be a little bit more than this, I believe. But if anything, we'll send out an email to you and let you know why that number is either accurate or inaccurate. And then I'll give you an explanation. But as you can see, after we minus everything, all of the expenses, everything we made, and all the costs, we have a profit of $27,569. And this is how you generate your income statement based on the Futurepreneur cash flow statement. It's the 2-year one, 24 months. It's probably the most easiest to use. But again, if you did want to use the slides that I've included, they are there for you to use as well. Again, you use the same formulas here, but you'd be doing it by hand. So I just want to now open up the floor. If there's any questions, if you need me to circle back and just explain something, or, if you have any concerns, please don't hesitate. And I'm here to help you.
Thank you, Brandy.
No
We
problem.
did have a question a bit back about on the cash flow chart.
Yeah.
They were wondering, if you don't have a loan yet,
Yeah.
would you operate the cash flow chart with the amount of loan required, or would you only use actual?
Okay, so if you don't have a loan and you're not bringing in, okay, when you say a loan, do you mean for the expense part, or do you mean for cash flow here, or do you mean here? Like you're not bringing in any money here, like for the funding sources, or do you mean for the loan?
Yeah,
that was my question. Yeah, that was my question. So sorry. I mean, from the initial funding, when you're in the beginning.
Yep.
And you're trying to figure out how much money you need, then if you don't have the loan yet, but you know how much you need for it. Sorry, people are my. Would you operate out of the amount that you need?
Yeah.
And then just hope that the loan approved, or that you get multiple funding sources to replicate that cost? Or would you operate out of a more conservative amount? Like say you need 100,000, but you're not going to get that, so you're going to operate off of maybe 50,000.
Okay. Okay. That makes sense. I get what you're saying. Yeah, if you know you need $100,000 to start your business, then that's the projected money you need for the business. So I would always start your cash flow with that. Now, if halfway through you're looking to unlock money and you're realizing that you might not get 100,000, you might not reach it, but you know that you're going to reach 50 to 60,000. Remember, this is a cash flow document. Do you remember how when we first started, we were minus 36,000 because we only had 21,500. So it's okay that it doesn't match. You will go minus, but as you start to make money, it'll turn back into the black again. So for making assumptions, it's okay, because these are all assumptions. Anytime you haven't made the money, it is a sale assumption or a projection. So it doesn't have to match verbatim, and it doesn't have to you don't have to have it secured already to be able to include it. So that's okay if you list it as 100,000, find out later you're only going to have 70, still do your cash flow based on the 100,000, because as you see, it will correct itself later on as you start making money for the business.
Okay, and if there's
Yep.
time, I have a kind of a secondary question to that.
Yep.
And that is, if you remember in the very first session, I said that my business plan is in stages because I wanted each stage to support the next.
Right.
So when you do this, and I know you have your year 1, year 2, when I go to like year 2, would I take the profit or the money that I'm using to support the next stage, like basically year 2, would I do it that way, or should all the money for all the years be in the very beginning?
So, okay, so your business plan is in stages. Every time your previous year, like your new year always has to include your last year, because that's what you're starting with, right? So it will follow you year to year, even if your business plan is in different stages, even if you're dealing with different products and services, your profits from last year will always carry over to everyone. So every year,
Right.
just carry over that balance. Even if you're not utilizing it, it's okay. It just has to carry forward. Yeah. Yep. No problem.
All right. Perfect. Awesome. Thank you.
No problem, Jess. Is there any other questions that we have?
There we go. Somebody, Tyra's asking, what do we do when we come to year 3? So if they want to, for instance, if I want to use the template retroactively for 2022.
Okay, so if you wanted to use that, so this is a great thing about this. You can change the year. You can just carry over your amounts from the previous year, and instead of saying here, cash flow year 2, you would just change that to cash flow year 3, just like that. And you would do it continuously. And you would always have a working flow of your year 1, your year 2, your year 3, just like that. That's it.
Perfect. Thank you.
Yep, no problem.
We have a raised hand from Lenny. Lenny, do you want to ask your question? I'm going to see if I can unmute you here.
Okay.
Hi, it's Lenny. Not so much of a question. Good afternoon, Brandy. Thank you.
Hi.
I'm on. Okay, I don't know if this is working.
I can see you.
You can hear me though.
Yeah.
Brandy, you're amazing. I am so well informed as a result of these 3 hours I've spent with you, and I have a standing offer. I'm coming to Toronto in late May, for the International Indigenous Music Summit.
Okay.
Lunch is on me. Lunch is on me when I'm there, and I'm bringing you the business plan that you helped me design.
Oh, that'll be amazing to see.
That's why lunch is on me.
Okay,
sister.
All right.
and Andrea, I have a 1:30 appointment. Sorry, I'm in Vancouver. I got to run for some. It's like Andrea and Gabrielle, same offer. I would like to talk to you guys, you gals, I should say, when I'm there. What drives me this year is that before all of this took place, I've already secured a position in the Fort Langley Jazz and Arts Festival as the Aboriginal Creative Director, and I have no idea how this stuff gets done. So I'm doing this crash course on how to get this stuff in order. So thank you so much. You've covered so many bases, and I feel so inspired and empowered by what you've provided. So keep
I'm
doing
so
this
glad.
stuff, Andrea.
Thank you.
Yeah.
Thank you, Lenny.
That's amazing.
I might make you write that out for me in a testimonial.
Absolutely. Because
my boss, Amy, would be very upset with me if I don't have that written out. So I'm going to send you an email if that's cool.
Absolutely. I'm coming to the office. I'm going to meet this operation. I think what you people are doing is essential for the re-elevation of the arts and craft here.
For sure.
Thanks, Lenny. That just made my
that's
week.
all I really have to say.
Thank you so much. I appreciate that feedback and take it on board. Cheers. Thank you.
Absolutely.
Thank you very much.
Thank you.
Well, that was really nice, everybody.
Yeah. Oh.
I have a hard time accepting compliments. Does anybody have further questions for Brandy while we still have her with us? This was super helpful.
Okay,
Like,
good.
I have stared at many a spreadsheet, and that's about as far as I've gotten with them.
Yeah.
So this is really, like in terms of actually using it in this way, I've never used it like this. So this was really, really helpful. Just the walkthrough, it was great. Oh, we do have one
Perfect.
more question here.
Yes.
Mandy in there.
Hi,
Oh,
Mandy.
maybe that might be me. Awesome. There we go.
Hello.
Hi.
Thank you so much, everyone. I missed session 2, so I will go back to the tapes and watch it back. And I did just miss the beginning part. I was curious if under cash for sales, if that was just an easy title for like all monies in, or if that's simply just cash sales. And then
So-
you would make a separate one for if you were getting like, say, donations online, or like
Oh.
tips at gigs, or like if you would make separate sections for different types of payments, I guess, if that
Yeah.
makes sense.
Yeah.
And if you were also using like, say, Square Reader versus Shopify or something like that.
Absolutely. Absolutely. So this
Okay.
this document here is just a plain Jane document. You get to customize it to your the way you earn money and whatever expenses your business incurs. So when you are thinking about what type of revenue bring in, all revenue must be accounted for. So if you're bringing in tips, you can have another column here for tips. Under total cash from sales, you would just right click and you would add another, you would just hit insert and click insert and you would add another row. But when you get to that first row, it's blank, right? So what you're going to do is you're going to go in there and you're going to explain what the formula is. So let's say your tips are I don't know, $10 a day and it's 7 days a week. You would just put that in there and you would literally just type an equal sign and you would use whatever cell the number comes from. You would click that. I can give a better explanation if you have a direct question and like that. But what I'm saying is let's say if we were coming here, we were opening a new cell, and then I said I was going to click I wanted to add for tips. It was $10 a day for 7 days a week. Then I would just come into this cell. I would open up an equal sign, and then I would click the cell that represents that number, right? See, like that. And then I would just do an asterisk, and then I would multiply it, but whatever cell, let's just say this cell there. And I'd hit enter, and there goes my number. I will delete that so it undoes everything I just did and doesn't ruin that. But that's what you do. It's very simple, but please account for all of your different or various ways of revenue earning. It's going to help you to track, because cash flow tracking is probably one of the most important skills you can learn as a business owner. You must know what's coming in. You must know what's going out. You must have a certain amount of money that's used for reserve. So if you don't track everything that comes in, you're not going to be able to forecast what money is going to be available for the business long term and down the road. So it's important that, yeah, just add an extra column, add an extra row. If you run into any trouble, then please just head to YouTube and click Excel formulas and how to enter a formula. And whether you're doing addition, subtraction, there's also formatting that comes at the top of this ribbon and bars that can help you. If you click here, conditional formatting, it'll show you a bunch of different things that you can do, whether you're adding, multiplying, whether you're dividing. So it's not hard to do. Just add those extra rows.
Thank you so much, Brandy, for another awesome session. This was a really, really great series. And I know sometimes I need to revisit things a few times. So I'm really grateful that we were able to record this so that I could go back and listen to it again and really get it in there. So thank you so much for everything that you've put together for us and all of the amazing information and that you've provided. Everybody has just been so appreciative of you. And yeah, this has been a really nice group. So thank you everybody for coming back week after week.
Yes, thank you. I appreciate it. And it's a pleasure to be here. You know, they say the best way to learn is by teaching. So I've learned even, things that, that I haven't had to explain for a minute. I got to refresh, and just being able to try to put it together visually and then getting out of my comfort. I usually do things live in person with a group of people. So having to come here and be on screen, thank God I get to stare at Andrea's beautiful face. That is helpful. But, again, we're all growing, we're all learning. And this is what it's all about, is coming together and collectively contributing, because that's how we grow. And that's how we make the world a better place. So I thank each and every one of you for showing up. And, I'm never going to forget this. And I really am thankful to be here. And thank you so much. And I wish you guys all the best of luck in your future endeavors, and stick with it. You got this. Like, you're going to do it. Don't worry. We got this.